Hey traders, happy Sunday. Hope you guys are having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed to your financial advisor. We'll start off here with the Dow ETF, the Diamonds, DIA. We were well below the 50-day in orange. That is our institutional line in the sand. In fact, we were 200 Dow points below it, or $2 on the DIA. With this kind of volume coming in, this is a huge yellow flag for the bulls. Remember, if you think back to Wednesday and Tuesday and Monday's articles, I said watch the 20-day EMA in red. That's 20 days worth of data. When that one cracks and we close below it, that's your first yellow flag. Boom. And what happened? 2 consecutive down days. Now we've breached the 50-day intraday, but not on a closing basis. This is the next line in the sand. If the bulls cannot hold that 50-day, bears get the edge on the daily charts, target all the way down here, which would be the May lows at 247. Not saying we're going to get there. We could turn around any time, but these are the technical levels we want to watch, and they've served us well in the past if you go back and look at different time frames as we broke them. And even during the May decline, it was down day, down, up, down. We're 3 straight downs. There's definitely some profit taking going on right now. And by the way, that is a hammer candlestick pattern. I call those rubber hammers when they occur at key support areas because they are just not trustworthy. So do not, in my opinion, take that as a true hammer. It just happens to look like one. All right, how about the S&P 500, the spiders? Similar situation. Remember, I said watch the red line. We broke it back on Wednesday, Thursday, Friday, follow through. We did dip below the 50-day moving average, that institutional moving average in orange, but we closed above it. We didn't dip as far below as the Dow, but we still got back above. Same story here. We close below the orange line. Bulls lose their edge on the daily charts. We take a look at the NASDAQ, the Qs. They pretty much just tagged their 50-day, but again, 3 straight days of a pickup in volume. Same thing happened here on Wednesday, broke the 20-day. That was, if you're a shorter-term trader, you were put on notice there. And now all of a sudden, here we sit. Take a look at the IWM. This probably is no surprise. They also had 3 straight down days. They've never gotten back to their all-time highs. They still can't get above 160. We tried here back on Tuesday. And just like that, it's all given back on big volume. These guys, however, did close below the 50-day. Therefore, the bears have the edge on the daily chart on IWM. There's a little bit of support here at 151 and then back down to the May lows, 145, 146. Take a look at MDY, which are our mid caps. Similar situation. We rallied off the lows, but closed below the 50-day. There's a little bit of support here around 345, 346, and then it's back down here, and there's an unfilled gap as well. IWM, MDY not looking good, and they're breaking down the worst. That's also a bad sign. We take a look at the dollar sign VIX. We got our spike. That's a bit of a reversal candle, but the momentum here is still up. The momentum on the S&P, on the Dow are down. This is bullish VIX, which is bearish for equities. So in closing, walking into this week, bulls, you're put on notice, you are clinging to the ledge, your fingers are on it. We lose that 50-day, I think things could really intensify. And actually, let me just go back to the Dow here. Just to give you a little context too. Just because we held it doesn't mean that on Monday, we don't have a nice bounce, right? I already talked about that. Or Tuesdays, there's a bounce, turnaround Tuesday. But my point is, if we close below the 50-day, a lot of times the market doesn't say, oh, we're just going to close a little bit below so everybody can go, quote, load up on long puts or exit bullish positions. Sometimes what happens, it's a hot knife through butter, and you end up seeing a 400, 500, 600, 800 point decline in the Dow, and that leaves you sitting here saying, well, that was ugly, and all of a sudden you were here, and now you're down here, and now you're scratching your head saying, well, now what happens? Because support's here. In one day, half this area could be covered. That's why it's always a great opportunity, especially on the weekend, to go over risk in the portfolio. Make sure as a trader that, if I looked at my portfolio, can I withstand a big down day? What has my portfolio looked like now with 3 straight down days? Because it could easily get a whole lot worse. All right, now let's take a look at some of the other big stocks out there. Here's Apple. It had earnings. We reversed lower, we're below the red line, put on notice. The red line has been a wonderful trailing stop ever since June. Target 50-day, we break the 50-day, back down to May. You're pretty much going to see that across the board on a lot of these stocks. Here is Google. Big earnings gap up, and now we're just retracing. Now for Google, this is a light volume retracement considering how much volume was seen on the up day. The target remains the 20-day. We've got below 20-day, then you come back down here towards the gap fill. Amazon has already started to break down. Gap below the 20-day, now we're below the 50. Where's the next target? Back down at 1,700, 123 bucks lower. Take a look at Netflix. They had their earnings drop, right? I'll try to zoom in a little bit here. We had the earnings drop, started proceeding lower. We then tried to rally, still can't get above the red line. Interestingly, we sort of got close to some of these lows. We actually did get close to the May and June lows and stopped cold, and then 5 straight down days. If we go back and take out that earnings move, the low from what is that, 305, let's say on a closing basis, get below 305, back down here's the target. Again, not saying it's going to get there, but technically you can see how, whether it's big tech, the markets, the major market ETFs like SPY, Qs, Diamonds, they're not looking good right now. A couple other stocks to watch here really quick. Here is XPO Logistics. Earnings, we got a gap up. We've cleared a previous high. There's this one little swing high here, just under 80. Then there's a little bit of consolidation, 85. Then the next target is way up there. So from a purely structural perspective, this one looks really interesting. And there's a lot of basing involved here. I would also consider a 20-day EMA as an end-of-day trailing stop. So this one bucked the trend. Here's FIZZ, FIZZ, went pop, fizz above the 50-day. Even though the markets were down, this one went up. Target, I would say back up in here in this consolidation, mid-50s. VMware, BMW, haven't looked at this one in a while. Big down day on Friday, and we closed below the previous lows just by a little bit. The next target, there's a little consolidation, 145, 150. Otherwise, it's back down to the December lows. And what's interesting here is once we had the earnings gap down, the bulls were toast. You know, they lost their edge. Then we hit the 20-day and went lower. We get above the 20. It's so weird, right? You get above the 50 in orange, and then we just kept closing on top, on top, on top, on top, on top, one day below, and then the bottom falls out. So VMware here is bearish, not looking good at all. How about DELL? Can't even remember the last time we looked at DELL. Stock was down big on Friday. The lows right here around 50, 51 would be the target below there. Back to January, 40 to 50. How about John Deere, wrong spot. John Deere is already down 3 days in a row. Volume's not huge, but there's a lot of price damage. And the last time we had a sell-off in the market, which is why I'm bringing Deere in, this thing went from 165 to 132. A lot of talk out there about tariffs, tweets, and all this stuff. Just remember, the market might just need one little poke in the back to sell off, and whether it's tied to a tweet, a policy decision, whatever it might be, it almost doesn't matter. Just what I would consider doing is follow the price action and just ignore the news, ignore the catalyst, because one day a tweet is bad, one day a tweet isn't. You know, it just changes from day to day. So if the markets roll over here, Deere was an example of in May, 165, 130. Now we're at 170. We break the 50-day. This is the target again. So it was interesting as I was looking around different stocks, seeing who got beat up in May and how they're looking right now, and Deere is one of the better examples. So yeah, I went right back up to 167 after it was down, but this is the kind of downdraft that could happen again. So heads up on those positions. And a question on Activision. Now, Activision has earnings. It's had a practically year-long trading range, even going back into December of last year. Here was the earnings report. It's hanging in there. What I'd really like to see is, it's going to be hard here to zoom in. We did close above the high here in May. We didn't close above the high in January. If I want to be bullish on Activision, I could consider a 20-day EMA as a potential trailing stop. Even though it was down on Friday, it was up on Thursday when the market was down. The target would be initially up to where the gap down occurred, 55, and then a gap fill at 62.50. Don't know if Activision can buck the trend during the month of May when the S&P sold off. It too sold off, not that bad, but then it never really rebounded it either. If I wanted to take a wait and see approach, I would make it close above this high here. It's like take out one more. That close is essentially $51. If it can do that, I maybe would feel a little bit better about it. And the up days, I would want taller volume bars than the down days. So bigger black up days, smaller red down days. Okay, I hope you found this helpful. Again, heads up, this could be a very interesting week for the market. We've already seen selling and big volume has come in. The last time we've seen volume this big on an immediate breakdown would go back to October, where we saw big volume spikes. Now the volume now on the Dow is not as big as October, but we really didn't have 3 big pervasive down days in May. It was a lot more chop. So I would say from price action, August is now matching October. We went down, chop, chop, and then plunged into December. Nothing's ever going to play out exactly the same, but my point is heads up, put on notice. Okay, bulls and bears and traders, wish you guys a fantastic rest of the weekend, and I will be back with you in Monday's video. Take good care.